If you're a Bitcoin miner, you want one thing: to get paid as much as possible for your hash rate. Today we are exploring NiceHash, a marketplace where miners sell their hash rate and buyers compete against each other. The result? You're always guaranteed the highest possible payout for your hash rate. Let's get into it. Hello, Marko, and welcome to the Energy to Compute podcast.
Hi, thank you for having me.
What led you into mining and NiceHash? What is your mining journey?
I started mining in 2012, where me and my brother, we used to play Diablo 3. And if some listeners know Diablo 3, in the beginning of the game, there was an auction house where you could sell the items on the marketplace for real money. And there was a bot that you could buy, but you could only buy it with Bitcoin. So we bought that. We first bought the Bitcoins, then we bought the bot and farmed the items. But then my older brother find out that you can actually mine these. And at the time we tried or attempted to order the Butterfly Labs miner. We failed. And then a few weeks later, he came up again that there's a GPU mining that we can do. So we started doing that, but it was really brief because at the time there was already ASICs coming to the marketplace, to the network. And we shortly after that switched to Litecoin. I remember Vertcoin, Feathercoin, even Dogecoin soon afterwards, and a few other coins that we were always moving to the most profitable one. Then in, I think, like 2016, I started using NiceHash as a software for mining. Me and my brother hosted other miners. We had a computer shop in my hometown. And when we built the computers, people started coming to us that they want Bitcoin miners. We built GPU miners for them. And the next issue they had was that they cannot run those at home. It's too hot. It uses too much electricity. And then we just rented an office. And in that office, we started putting the first machines for the clients. It was a learning experience. We learned so much about electricity, about cooling, all of that. And I actually posted a video on YouTube about what we're doing. And soon afterwards, and someone from NiceHash reached out to me, said if I wanted to join NiceHash. And in 2018, 2nd of January, I joined NiceHash and been with them since then.
So in your mining journey, I see that you already explained some problem that NiceHash probably helped you solve. For example, the profit switching. So switching all these different clients between all these different coins based on what was the most profitable coin to mine at any given time must have been really difficult. And that's one of the solutions NiceHash provides, right?
Exactly. At the time, as I said, there was at least 5 coins that we were switching between, on different algorithms. And managing that for clients at the time was pain. There's, let's say, dozens of clients, each with a few of their own rigs. How can we push or change pools automatically? And we had to set up the pools for them. We had to do everything for them. Whereas on NiceHash, you simply connected the machine to the account and everything was done automatically. And on top of that, you got paid in Bitcoin, which is even better, right?
What is NiceHash?
NiceHash was built or established in 2014 in Slovenia. It's a bootstrapped company. There's no investors or similar stories. It's still family owned, and it launched as a marketplace, the same product as it is now. The first algorithm was actually script, and from 2014, the core product has always been the same. It's spot, on-demand, deliverable hash rate marketplace. Essentially, what that means is that you can sell or buy the hash rate in spot, in real time. There's no, let's say, future contracts or obligations or risks because everything is in real time. Imagine like buying electricity in real time. For each watt of energy that you use from the grid, you pay for that in real time. NiceHash has gone through a lot in this past, 12 years now. We recently moved to Switzerland. Our goal is to be well audited, well regulated. We see that the Bitcoin mining industry is going into that direction. And for now, we can see that this was the right decision.
What separates NiceHash from conventional mining pools? What makes NiceHash unique?
A mining pool is in direct contact with the Bitcoin or Litecoin network. A mining pool is a node that operates on that network, right? So miners send hash rate to the node, and then the pool operator receives the money from the network and splits that money, currency, Bitcoin, to the miners based on how much shares or hash rate they contributed. But NiceHash is a marketplace. NiceHash doesn't work directly with the network, but it works with buyers. So as a miner, you connect your machines to NiceHash. Someone on the other side buys your hash rate and use it however they want. For example, they could be solo mining, they could be arbitrage trading. Maybe they found a coin that's more profitable than Bitcoin, but it's more risky because it's not doesn't have such high volumes on exchanges, etc. So even hosting providers use it for insurance. So if a client's machine goes down, they can replace that hash rate in seconds and deliver it to their client. There's so many use cases. I like to compare it to electricity because both of hash rate and, or maybe better, compute and electricity is a commodity, and commodity can be used different ways. Someone can buy electricity to watch TV, someone can buy it to play video games, someone can buy it to dry the clothes, and each of these buyers would be willing to pay different price for that electricity. So it's kind of like very similar use cases from the buy side, where buyers use the hash rate however they want. Whereas on the sell side, the miners can be looked at as electricity power plants. So someone who produces the commodity, the compute, and they just put it into the grid, and someone on the other side takes that electricity and use it however they want, or let's say liquidate it however they want, right? That's, I would say, a short description of NiceHash. So essentially how it's different is NiceHash is more like a proxy, technically speaking, than a mining pool, whereas the mining pool works directly on the blockchain.
What are the benefits to using NiceHash for hash rate liquidation compared to using traditional mining pools?
A mining pool is limited by the network output, or the mining emissions, as we call them. So in 24 hours, there's only X amount of Bitcoin created. And depending on the market share of the hash rate from a pool, that's how many Bitcoins that pool will get. And that's the fixed amount. They cannot get more, especially the FPPS pools. They cannot get more than what the maximum cap per day is. So every 10 minutes, there's 3.17 Bitcoins created. And that's the maximum that a miner can get. Whereas on the marketplace, that's the price floor. The price floor is that FPPS output. And when buyers start competing for the available hash rate, they're willing to pay more for that available hash rate. A practical example would go, a solo miner is willing to pay 1% above FPPS in order to get the hash rate. But arbitrage trader will be willing to pay slightly under FPPS because they have to make some money, right? For example, they make 0.5% on the arbitrage, buy low, sell high on a pool, whereas a solo miner might really want that hash rate. So they will have to set a higher price on the demand side in order to outbid the arbitrage buyer. And then there comes another buyer, let's say a hosting, whose client's hash rate just went down and they want to replace it. So they simply buy the hash rate on the marketplace, but in order to get the hash rate, they have to be the highest paying buyer. And that means that they have to outbid solo miner by, let's say, another percent. And at this point, we already have pay rate that's 2% higher than what the FPPS index is. And there obviously are spikes where in sometimes there's 5% premium. We've even seen 60%, 30% premiums. And sometimes there's only like 0.5% premium. It really depends. But the main point is that the FPPS index is the price floor, because whenever the hash rate price drops under FPPS, the arbitrage buyer will come and buy all of that available hash rate, because for them it's easy money. It's almost safe bet, because they will for sure buy at 0.5% lower and sell at that 0.5% margin.
So these hash rate traders, they're sitting and watching the order book, watching the price. And then if the price at NiceHash were to go just slightly below the FPPS rate, they would quickly come in and buy all that hash rate and direct it to an FPPS pool to capture that really small margin, that arbitrage, and that again will drive up the price on NiceHash up to the FPPS rate. So is that what you mean?
Yes, exactly. And that's the safe floor that I'm talking about. So the arbitrage buyers, they make sure that price never drops too much under FPPS. It does happen, of course, because there gets a price and there's a lot of hash rate connected in a few minutes. The lower paying orders get activated, and at that point, for maybe a few minutes, maybe an hour, the pay rate is or could be 2 or 3% lower, but shortly after that, it balances out. And the average on the longer term, let's say in a day, is still higher than FPPS. And that's provable with data, actually.
How has the historical payouts been at NiceHash compared to FPPS pools?
Let me open the data. I know that in February or March this year, pay rates were about 5% higher for a few weeks. Let me just see. So right now, for the last 7 days, as of 2nd of April, the premium was 0.64% higher. For the last 60 days, it was 1.25% higher. This is based on our pay rates and FPPS index.
What are typical scenarios in the market that can lead payouts on NiceHash to surge compared to FPPS pools?
About 2 years ago, there was Fractal Bitcoin that was launched or that gained popularity. And at that point, NiceHash buyers were able to buy SHA-256 rate and direct it to Fractal mining Bitcoin. But they had to pay for that compute in Bitcoin. So essentially, the medium of exchange for compute is Bitcoin. Because Fractal was so much more profitable, they started arbitrage trading with the hash rate, essentially. That was one case. The other cases are if there's a high demand for on-demand hash rate. Essentially, it's very simple, and it comes from different reasons. One of them is that a certain big buyer really wants that hash rate. For example, for solo mining, we've seen people buying exahashes in order to attempt to confirm a Bitcoin block by themselves. They spend 10,000 euros or dollars worth of Bitcoin on the hash rate, and they have a certain probability of confirming a whole block by themselves. A few weeks or months ago, we worked with 256 Foundation. We donated 1 exahash for an hour. It was a really nice example how anyone can buy hash rate, even exahashes worth of hash rate, and deliver it to whatever pool they want or to whatever destination. And I explained before the hosting insurance. These kind of buyers come in and place higher paying orders. We have other types of orders, for example, business orders, OTC deals, and all of that combined drives up the price.
So NiceHash has over the years cultivated this diverse ecosystem of buyers of hash rates. You have many different types of buyers. Some are willing to pay more for the hash rate than others because they can liquidate it in other ways, etc. Of course, this should theoretically lead to higher payouts compared to conventional FPPS pools. If you sell your hash rate to a market you should theoretically get more for it than if you only send it directly to one possible buyer. Our company, we use NiceHash. We're very happy with it. But I also think from a risk perspective that NiceHash should be better than just dumping your hash rate to one FPPS pool. Because if you just send your hash rate to one FPPS pool, you cannot guarantee that you will get a benefit if the hash rate suddenly becomes much more valuable. With NiceHash, you know that if something happens in the market that should drive the price of hash rate up, you will get a benefit because there are multiple traders on the platform that will bid the price up to the real value. So I actually view the when you use NiceHash as lower compared to conventional FPPS pools as well. What do you think about that perspective?
Yes, definitely. If we compare NiceHash Marketplace to PPLNS pool, or a pool where there's pool luck involved, NiceHash acts as a translator between any type of reward system, let it be PPLNS, FPPS, or that datum. All of that translates to real-time PPS. And the main metric is what's the price per share. And the buyers set that price. So the buyer takes all of the risk of getting the block reward or not. The buyer takes the risk of getting paid more or less. They buy the compute and they use it however they want, but they have to pay for it in real time. So a buyer, let's again compare to electricity. Think of a buyer that buys electricity and uses it to produce a secondary product. Let's say, I don't know, he produces heat for his home or something else. It's his own risk to use that electricity in a best way possible. The same goes for buyer of hash rate. They paid for that hash rate. They're paying for it, and they have to use it in the best way possible. And this opens up a lot of humans like to think outside of the box. They like to be creative. They get creative when they have a chance. And NiceHash gave them that chance to be creative with the hash rate. Whereas before, you cannot be creative with your hash rate on a pool because a pool promises a fixed pay rate and that's it. That's the end of story. Here you have a human that's creative, that finds ways to use the hash rate in a more profitable way, to make money on top of that. So that part eliminates the risk because the buyer already, whenever you send a share, you get paid for it, essentially, as a miner. That eliminates that risk of anything going wrong.
So one of the many types of buyers you have on the platform of hash rate is the OTC buyers. And I reviewed your website before this podcast, and I noticed that you do OTC deals for hash rate as well. So this is very interesting. Can you talk more about the OTC deals? Like, how do they work?
The OTC buyers, we recently launched this, I think a few or a couple of months ago. And essentially, we offer OTC deals on both ends, either on the sell side. So to a miner, we can say a fixed price for X amount of time. We're pretty much flexible on these terms. Same goes on the demand side. On the buy side, where people try to buy hash rate, we are quite flexible here too. So if you're creative, if it fits our business model, we're happy to do OTC deals in whatever, let's say, range or however you want, as long as nobody loses, right? So there's ways with OTC deals that it could be secure, it could make sense for both parties.
Do you see a lot of demand for this OTC hash rate?
Yes, actually a lot. There's a lot of buyers. I would say there's a lot more buyers that are willing to do the OTC deals than sellers. And yeah, at the moment we have so much demand that we cannot fulfill all of them. And these buyers are willing to pay premium for that hash rate.
Another interesting feature of your platform is that you offer the ability to withdraw and buy virgin Bitcoin. What is virgin Bitcoin?
So a virgin Bitcoin is a Bitcoin that has no history. To people who don't know how Bitcoin works, essentially all of the Bitcoins are traceable from the moment they were created. And there are Bitcoins that were used, for example, in Silk Road or some other, let's say, bad ways. And these can be traced, or maybe they were stolen. All of that can be traced going back on the blockchain. But virgin Bitcoins are newly created Bitcoins that have 0 or maybe up to 3 transactions, hops as they're called. So a virgin Bitcoin is a Bitcoin that has no history, that was freshly mined on the pool, let's say, from the pool.
Is there an extra demand to get this?
Yes, we've seen a lot of institutional investors who are trying to invest into Bitcoin, but they're smart enough to understand that some Bitcoins are, let's call it, dirty, and who knows what the future brings. Maybe at some point the governments will say you shouldn't use those Bitcoins. They were used on Silk Road or they were stolen from someone. These Bitcoins should be returned. Or, I don't know what exactly could be the issue in the future, but there is a potential risk, even though at the moment it's small, but still it outweighs the small percentage that these VC funds and others are willing to pay for virgin Bitcoins. And if they pay a few percentage more, then they have peace of mind, let's say, for the future, because most likely they're buying Bitcoin, they're going to hold it. And on the long term, it's better to hold clean Bitcoins than, let's say, Bitcoins that you don't know the history well enough.
Another thing I wanted to touch on is the convergence of Bitcoin hash rate and AI compute. So is there a way to trade AI compute almost the same way like people today trade Bitcoin hash rate?
Yes, it actually already does in similar ways, not in the exact same way, but most of you probably know Vast AI, or I think it's Rampot AI or something like that. And those are essentially marketplaces for compute, more technically marketplaces for rigs, for machines, but still through some direction they are selling compute. Also, tokens are the new hash rate, let's say it like that. Each prompt uses some tokens, and these tokens, if you know Open Router, it's a website where you can rent models or compute from these models. They're essentially selling the tokens. So yeah, it can be sold, but in a slightly different manner. AI is growing a lot recently, and I personally have been involved into it also. I mean, we can see the publicly traded companies, they're using their Bitcoin stock to fund their transition to AI. It just shows how publicly traded companies were always after profit. And it makes sense. It's publicly traded company. They're investors who want to make money, and they have to, the CEO or the board of the company has to cater these investors to make as much money as possible. So it makes sense that they're pivoting to AI. Majority of them are, as far as I'm aware.
Is NiceHash looking to get into the trading of AI compute as well?
We're always trying to know as much as possible about the, let's say, surrounding products that we could integrate. So we're always investigating, we're always exploring, we're always trying to build new things. And that's most of it that I can say for right now. We're always trying to find ways how to make a platform better place, how maybe we could copy the model that we have to other verticals.
How can miners start to use NiceHash?
It's very simple. Create an account, do the KYC, and that's it. The user experience is identical to using any other pool. There's the mining address, which is account name, and then there's the Stratum address that you use in your machines. The password is X as everywhere else, and that's it. It takes literally 5 minutes to set everything up, including the KYC.
Where can people find you?
I'm most active on LinkedIn, on X a little bit, and they can always find me on conferences. I'm going to majority of the Bitcoin conferences, especially the mining ones, so they can also hook me up there.
Okay. Thank you very much for joining, Mark. It was great.
Thank you for inviting me.